Most people have heard of Disney. You've probably watched one of their movies, whether it be Star Wars, Pirates of the Caribbean, some of their Marvel movies. It's a pretty popular company. Or maybe you've been to one of their theme parks. And I certainly have been to their theme parks, both in California and Florida, and I even visited the one in France. It's a pretty good, entertaining experience. The company is known by many. It's been around for a long time, and it's been successful for a long time. The last couple of years have not been all that great for Disney. They've had their fair share of struggles and now are seem to be on the rise. I looked at their financials more recently and I like what I was seeing. I'm seeing that a business is getting back on its feet and it's beginning to really generate positive free cash flows. The company's growing a little bit on their revenue line and overall the health of Disney is getting better. For a couple of years, I just felt that Disney was not investable. The fundamentals did not look good. They were troubled both in the news, and their fundamentals just showed that the company was not clicking. It was not operating well. But things may have changed. I'd like to go through an analysis and see what I'd like to do with this stock. I currently don't own any Disney stock. I've owned it in the past, but haven't owned it in a long time. Now let's take a look at the fundamentals and see what we've got. Disney's a large cap company, $160 billion in market cap. The company stock has been on its way down recently. Over the last 3 months, 4 months, the stock's down quite a bit. The revenue for the company is 90 billion. It's a big company. They generate a lot of revenue and they have a nice net income. Their dividend is 1%, and it's a strong buy according to analysts who really like Disney. I'll take a look at that and make my own opinion on that. When we look at their financials, it really does show that the company has turned around and maybe is headed in the right direction. The last couple of years, they have been growing their revenue. And the difference being that their profitability, it went down quite a bit in 23, but it's really grown in the trailing 12 months. That's very good. What's also grown is their free cash flow. Their free cash flow has been growing over the trailing 12 months. And that's where I value companies based on free cash flow. So it's good to see that the troubled company that only generated $1 billion of free cash flow in 2022 has really picked itself up and has now generated almost $8 billion in free cash. That is a great improvement. Great job, Disney team. 22 analysts cover Disney and they have a favorable opinion of the company. They think it's discounted by 33%. There's optimistic expectations that the company is going to really improve their earnings per share. Right now, the earnings per share is $4.99 and a PE that's pretty manageable at 17.7. And they're going to grow it by 5% in 25 and then 12.53% in 26. So that's a pretty good forecast. And I'll use that information on my valuation. I took the fundamentals that I discovered for Disney and I put them in the valuation schedule that I've got for the company. The company is growing and they've got a really good starting point for free cash flow, which is good. Starting with that cash flow number that they provided, I'm going to grow that number by 5% and grow cash flows in the first 4 years by 5%. Long-term growth will be at 4%, which is going to establish terminal value, which is all cash flows after year 4. The company has a good balance sheet. Debt to EBITDA is below 3. So it's an 8.5 discount rate that I'm going to use on Disney. It gets me to $169.5 billion of value in the company. I'm going to add cash and take away debt to get to an equity value in the company, which is $127.9 billion. The market cap is quite a bit higher, $159.7 billion. So it provides a 22% premium that you'd be paying on Disney if you look at the cash flows the company's providing. If we look at earnings per share, it's $4.99 as expected. I'm going to move their PE 24. I happen to think Disney's a great company with a great brand, so I'm going to move that up. And it provides a nice discount of 44%. Using this formula to establish the intrinsic value using earnings per share. Overall, I think the stock is being discounted by 1%. It's fairly priced. I'd like to see the stock drop maybe 20%. If it does, and everything still looks good, I may begin to dollar cost average a position in Disney because I think the company is a really good company and a 20% discount would be a good discount to get started with Disney. I think Disney is a terrific business. Their brand is really valuable. The movies they own, very valuable. And the theme parks, they have a lot of competitive advantages. It's not easy for a competitor to just start building a new amusement park that could rival the Disney parks. It'd be very difficult and take a lot of money and capital and time and specialization. So I think highly of Disney, and I put them kind of in between the green and the gray in my desirability quadrant, which means that in some ways they're really competitive. They can keep competitors out, especially, for example, with the Star Wars franchise. People can't copy their characters and start selling merchandise. Only Disney can, as well as their parks, as mentioned, they're very difficult and take a lot of capital to build. So I like those aspects, and I think they'll have very consistent revenues and consistent growth in the future. But they do have some competitors, especially around streaming. They haven't figured that one out, and it continues to be a big threat. Some of their merchandise businesses are competing with general merchandisers, so they too will see competition. So they're not purely in the green, making them a really, really desirable company, but they are straddling both spaces. So I think the company is a good one. At the right price, I would be a buyer. For now, I'm going to watch Disney, and if the price continues to drop, I'll buy some shares at that point. So that's my video on Disney. I hope you found it interesting, and I appreciate you watching.